Welcome to Rich Keys channel, where we unlock wealth one candle at a time. Here, charts don't lie and neither do we.
Disclaimer, not financial advice. The information provided on this channel is for informational and demonstration purposes only, and should not be considered as personalized financial, investment, or trading advice.
Okay, welcome to Rich Keys Trading Channel. I'm gonna make this video pretty brief, as I've already done the analysis yesterday and presented it on my Trading View channel. So you can follow up on my Trading View if you want to catch up on the other part of the analysis. So on Bitcoin, starting out from the weekly, as we were projecting, we have come into our interest box, perfectly hit, you know, and we are looking to see whether the condition holds for uh, a pullback. In this case, we're looking at it from the bullish perspective that we've hit our 9-day period average. We've come into a support confluence zone, and therefore we're going to find our way going back up. Now, whilst that postulation seems possible, our RSI and our cycles and momentum is all pointing to the downward. So it's possible, but I'm not inclined for that yet until on the daily. So on the daily chart, we're looking at what this daily candle is going to look like today. Assuming we do get candle close as we are looking at it this way, then this setup is a bullish engulfing reversal candlestick pattern. And should this happen, where would I expect price to make its move to? I would expect price to first move up to this bounce target zone box here that I placed around here, somewhere between 115,000 to about that's about 115,000 there, about 114.9 to about 115,000. That's the bounce area that I'm expecting. Again, this area is a confluence of the Fibonacci level of 0.382. It's also the previous support at the time that this consolidation was happening. So I'm expecting that, this place would hold price and push price further down. If that does not happen and we get a candle open and close, particularly if we get an open and close above the 21, I would take that as a pullback and continuation of the rally into probably the 125,000 target. So that's the bullish case scenario. But like I was saying, because of the divergences on the weekly and the monthly, I'm not too much in favor of that alternative. However, that is an alternative to analyze. I'm expecting a consolidation between this price level 115 and the 112. Okay, because of this support zone that is very strong, it's not going to sift through here with ease. It's probably going to consolidate, build some momentum, and then we might break through here. And when we do break through here, my target is somewhere around the 104 thereabout. I didn't put a box here, but yeah, my target is somewhere around here. All right, somewhere around 105, 104 in the coming week. That's my target for Bitcoin. The other thing that I'm watching for today is the volume. Okay, so I'm watching the volume that brings in a potential reversal from the sell-off. Now, if this volume by the end of the day is good enough, right now this volume is fake. Okay, you get this small volume by this candle. That is a market makers manipulating this zone. Um, but if the volume by the end of the day is pretty sizable, like something like this volume bar here, comparable to something like this volume bar here or this volume bar here, this candle then will become very significant, and we could probably look for a move either to close above this box or somewhere around the 21 period moving average on the daily chart. So that's my brief analysis on Bitcoin for this coming week. Let's quickly look at NASDAQ and XPX, and then we can box it on from there. So with XPX, With XPS, we did exactly as we expected last week, that we're going to have a capitulation candle that has occurred at the Fib extension level, 62,442. Our liquidity is being cleaned up here. And now we have this bearish engulfing candle on the daily, closing below the 21. Target wise, I think target wise, I would expect us to come definitely hit the all-time high level of 6140 in the next coming week before any further continuation or further breakdown would occur. So this is our target for the week coming into this week for XPX. Briefly on the Nasdaq, let's see what the Nasdaq is also telling us in terms of our target for the coming week. So the Nasdaq also on the weekly formed the bearish engulfing candle, and I think at the very bearish minimum, Nasdaq would hit the 9 weekly period average and potentially would pierce into the support zone of 21,887. That will be a Fibonacci retrace of the 2.236 level. So I'll be watching out for Nasdaq to get to somewhere here, but definitely the 9 period average would give a pause before we get here. Quickly, let's box down. I also want to look at what potentially gold is also likely to present as our equity. So gold has formed a nice weekly hammer, and I think gold might potentially get it break this coming week. It all depends, but with this bullish hammer on the weekly, I would expect us to make our first attempt to the 3441 resistance and potentially break through. And if we do get any candle that opens and closes above this 3441.8 level, I'll consider that as a breakout, potentially to take us to our next target, which, if the rally gathers enough steam, our next target is somewhere around 3730. Briefly, next, let me quickly look at the dollar index. And the dollar index, as we were looking at, has done its job on the weekly. We still have a bullish stand. So whilst I'm expecting price to come down, I'm also expecting us to bounce a little bit up before we come down, based on this pattern that we have here, because this is still a very bullish pattern that we have here, bullish engulfing of this candle from a bullish rally. Okay, we just having a strong resistance sell off from the 21, and but the reason why I think we'll continue going down is, as I was saying, on the monthly, the trend is strongly down. We only played this reversal because we were so overstretched on the monthly. We closed outside the Bollinger Band on the monthly chart. If we were to continue going down, that would be more than probably 2 to 4 standard deviations outside the Bollinger Band, and that is statistically unsustainable. So now we bounce back into the band. We didn't even make it quite to the 9 monthly moving average, and we are getting our rejection. So the other thing is, on the monthly, we don't have any divergence yet. So I'm expecting this monthly candle to come below the close of this candle. Potentially, that would then give us an RSI divergence, where this is our previous low. And we're going to make a lower low where I'm expecting RSI to probably make a higher low. That would give us something like what we had here in 2020. We came down hard, and then we made a move up on the monthly, and then we came lower where RSI then was a little higher, and that gave us a slingshot. Okay, so that's a kind of a similar thing that I'm looking at on the dollar index in the next coming week. If we do get any reversal candlestick, probably going into next month, not this month, August, but September, that would then be similar to what occurred here that I was just showing you. So here, what happened? We came low, we went up, but then we came actually, in this case, we actually came to the same low. So there's also a possibility that we might come right to this same low or slightly lower, and then we'll do form our divergence on RSI on the monthly before heading our way up. All right, and so also for a trade tip this coming week, if you're looking to take advantage of any decline in the market, as we have projected that the bearish engulfing candle on the weekly chart suggests that the indices are going to fall some more coming into this week. And if you're looking to take advantage of that trade, but you don't have a way of doing it, one of the easiest way, for those of us who haven't learned how to trade options, is to buy an inverse ETF. So the inverse ETF for the S&P 500 is one of them is XPXS, and you could buy this, and while the market is going down, you could be making this rally up. Potential target for this, you could probably write it up to about what 510 thereabout, and just track the moving average as your benchmark. And anytime you get a reversal, you could get out, because these are ones that we don't buy and hold for long term. We just use it to take advantage of the market decline. Another one you can buy is I think is the SQQQ. This one is for the Nasdaq, and you could also look at SDOW for the Dow Industrial Average, and you could buy this SRTY. That will be for the Russell 2000 if you're looking to take advantage of the decline in these indices. So this is just a quick one for this week. Detailed analysis will be done as the week goes by, and I'll update the channel. So please do subscribe, like the video to encourage me, and when I post new videos, you'll get notified. So click that notification bell icon, and I'll catch you all in the next analysis video. Cheers! Have a great trading and profitable week. Bye.